So basically, we can divide this into three market condition or trend. We see the markets in the uptrend, and after uptrend, we see the market go into no trend. Now, after no trend, market can become downtrend. Okay, so these are the three market conditions that it will keep rotating: uptrend, sideways, no trend, consolidations, or sometimes we call it consolidations, or downtrend. Now, during these consolidations, we tend to see a lot of manipulations and stop hunting. Okay. Now, this consolidation, it can be in the form of accumulations, or it can be in the form of distributions. It depends where the bank's intentions is. Now, before we go into accumulations and distribution, which will be another topics, let's talk about why the bank want to go through a phase of consolidations before they decide to take the price up or take the price down. Okay, what is the reason why the bank want to go through a phase of consolidations? And during this consolidation, we see a lot of stop hunting and manipulations. Let's take a look why this happened, right? We see the price rally up. Okay, it rally up. This green candle rally up. Immediately, we see a blue candle, bearish candle. It reversed altogether 180-degree down. When we see this candle going up, what we see is a very bullish candle, and looks like market is going to continue to break even higher. And this will attract a lot of traders who are standing at the sideline waiting for this breakout. The moment they see this green candle, they will jump in to start to put in the order and break out. And what happened was, after all the retail traders start to jump in to buy at this high, hoping the price will continue to go higher, you see what happened to the bank did? The bank throw one big sell order, right? And when the price was trading at this low and finally eventually closed at this low here, those traders who actually bought at near the high here, right now they regret they jumped in too early. All right. So after that, we see the price continue to go lower. Now then the price move lower. It moved lower, right? Why the price need to move lower? When the price was going up like this, right? A lot of retail traders will think that this price is going up further. So what they did was, when the price pulling back, they put the buy limit, their stop loss below, hoping the price will go up, right? And that's exactly what the bank did. They know that there are a lot of stop loss below this. Okay, so they drive the price down to stop out all these people who have who bought here and their stop loss below. So they drive the price lower to get rid of these people, right? And after that, the price go up to make almost equal high. Now, why the price need to equal high? So that they try to get people think that this is a very strong resistance, so you should come in and sell here and put your stop loss above. If you sell and your stop loss is actually a buy order, okay, you can see what happened was, eventually the price came back. Okay, this is a level, so you can see the price came up, took out this, okay, and at the same time you can also see that the price moved lower, took out this stop loss below here, okay, and it moved up, took out the stop loss up there. Now, why the market, the bank need to do this stop hunting? Now, if the bank has the desire to bring the price, to move the price higher. Now, if there are some buyer who bought at this level, 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 who bought at this level. So there are so many buyers. Okay, so many buyers. They all bought it when the price was in a consolidate, right? So when they buy, when they put the buy order here, their stop loss is going to be below the swing low. below the swing low, right? All the stop loss is going to pile below the swing low. So there are millions and millions of stop loss below the swing low. So if they are buying, their stop loss is actually a sell order. Okay. Now, then the other is, where is the target? Well, if they buy over here, right? Some trader will put their target here. Some trader 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 put their target here. It depends, right? So you can see there are different kind of target piling up here. Okay, so they bought it here. They take that profit here. Now, if they buy here and they take profit here, so they are taking profit is actually a sell order. Sell order. Okay. Now come the problem. Now the bank want to move the price from this area to this area. Okay. So if there are this buyer around in the market who already bought before the price start move higher, and the bank start to move the price higher, the moment the price arrive this level where this buyer are setting their level to take profit, this taking profit order are sell order, right? So in other words, as the price moving up and triggered all these take profit target, these are sell order. It means that this sell order is acting like an obstacle to prevent the price from moving higher. But the bank destination, the final destination is here. They want to move the price higher. So in order to move the price higher, the bank have no choice but to absorb all these sell order, right? So as the price keep moving up and more sell order is coming in to sell, it means that they will consume up a lot of capital. The bank will need to prepare a lot of capital to continue absorb all these sell order. Now, you just imagine if the bank run out of capital, what is going to happen is this bank can eventually lose a lot of money, right? Or the price goes down. If they don't come in to absorb all this order, the price will have to go down. But the bank do not want the price to go down because they already bought at the low here and they want to make money and they want to take profit here, right? So they have no choice. They have to keep absorbing this sell order. They say they know that a lot of people who bought it here, right? So they will intentionally drive the price lower because their stop loss is all below the swing low, right? So that they stop out all these trader who bought early before the price start moving up. So once they get rid of all these trader, then they start to move the price up. Now they do not have to absorb all the sell order where the people used to take profit. So that's the reason why the bank need to stop hunting, because they want to get rid of the early buyer or early seller. We see price goes up, okay, and they pull back. Now, why the price need to go higher? Now, after the price has rallied so high, there'll be some trader who think that price is going to reverse. So these traders start to position themselves early by selling. Okay, they start to sell at this level, they start to sell at this level. So we see a lot of selling. They start to come in to sell. So if they sold here, where are they going to put their stop loss? Their stop loss is going to be above the swing high, above the swing high, above the swing high, above all the swing high, right? So if they sell here, their stop loss is actually a buy order. Okay, so now again, why the bank want to stop out these people before they move the price down? Because imagine if these people sell here, where do you think they were likely to take their profit? Well, the same thing again. Maybe some of them take their profit here, some take their profit here, some take their profit here. So we have a lot of different level where people start to take profit, right? So if they sell here, their taking profit is actually a buy order, and they want to move the price down. Okay. Now, in order to move the price down, and once the price arrive this level where these traders start to take profit, these are buy order. So in other words, the bank would need to absorb this buy order if they want to move the price lower. If they say they give up, they don't want to absorb this buy order, what will happen is the price will start to move higher. All right. So that's what the bank doesn't want. So the bank have no choice. They need to absorb as the price move lower. We see the buyer come in, right? The bank need to absorb all this if they want to move the price lower. So again, this is a very capital intensive exercise to absorb the order. So what the bank can do is, now before they move the price down, what they can do is they can manipulate, let the retail trader think that this is a very strong support and they should expect the price go up. Okay, so there are some traders who are already coming to buy. They bought at this level because they assume that it's a very strong support. And what they're going to do is, if they buy here, their stop loss is going to be below this swing low, right? So there are millions and millions of stop loss piling below the swing low, right? So now the thing is, the bank want to move the price lower. Okay, so what they do is they move the price lower to get rid of all these stop loss, trigger all these stop loss, so all these traders are out. Okay, then after that, they know there are some traders who actually position themselves sell. They expect some traders also have the belief the price is going down, so they sold early, and their stop loss is going to be below, above all the swing high. Okay, so once again, the bank want to take out this trader before start to move the price lower, because all these trader they are taking profit is actually a buy order, right? So if the bank do not take these people out as they move the price lower, they are taking profit order, which is a buy order. It's going to prevent the price from continue to move lower, because the bank target is far below, right? So it is more economical for the bank to stop out all these trader before they start to move the price down.